Welcome to the awesome students of Peking U. So welcome to Irvine. As you can see, we live in paradise. You know, life is great and no complaints. So a few stories. I'll tell you a few stories. Then we take your questions. Okay, so first I'll bore you with my stories. Then we'll get into some more interesting things. So I have a personal trainer at my health club. His name is Jason. I've been with Jason for a long time. I would look better if I ate what Jason told me to eat. I don't do that, so the result is not as good as if I follow Jason's advice, because I can only follow his advice for the physical things we do. So anyway, Jason, he's been my trainer for probably more than 12 or 14 years, been a long time. And I asked Jason, you know, every time there's a Powerball lottery, you guys know what a Powerball lottery is? Like sometimes the payout will be like 500 million, 700 million, and whenever the payout is really big, Jason always buys a ticket, okay? So I asked Jason, I said, Jason, listen, what's gonna happen if you win the Powerball? Okay, can you explain what your life is going to be like one day after you get the 500 million? Okay, so Jason thought about it, and he said, you know, I just want to hang out at the club. Okay, so probably I said, how are you going to dress? How are you going to dress after the 500 million? He says, probably exactly the way I dress right now. And then what are you going to do in the morning? He said, well, I'm probably just going to come to the club. And I said, Jason, after you get the 500 million, am I going to be a client of yours? Okay, like, are you going to, like, am I going to be? He says, yeah, I'll probably keep you as a client. Some of the clients I will drop, okay? I just make it a little flexible, which one I want. But I'll probably just come and hang out at the club, and that's it, okay? So when Jason told me that, it reminded me of what Buffett says. So what Buffett says is that you should take the job you would do if you were not getting paid. Okay? So it's very important that when you pick in terms of what career or job or company you go to work for, that if there was a way you could support yourself, you know, pay your rent, etc., and this company paid you nothing, you still go to work there. If you do that, you have made the right decision, okay? If you make the decision based on the highest pay or the most prestigious name or any of those things, that's the wrong way to make a decision. You will probably later regret that decision. So this is the first talk I think I'm giving where I did not put on pants. Did you notice I did not put on pants? Okay? Like it's exposed. The legs are exposed. It's terrible. Okay? So why did I not put on pants? Okay? The reason I did not put on pants is I wanted you guys to see me the way I am dressed every day. Okay, I did not wear special clothes for you today, I'm sorry. Okay, every day, and you know, Fahad and Jaya, they work with me, they've got sick of looking at my legs. You know, they wished I would cover them, but it's the way it is. So, every day when I go to work in shorts, okay? In fact, I'm dressed like this, okay? And why do I do that? Why do I not have, because I'm running an investment fund, there's about $800 million, it's a serious activity, why do I not put on a suit and tie and go to work? Because I think I'll be less comfortable and I will not be as excited to do that every day, okay? Like I like my Nike sneakers. Do you like my sneakers? You know, I think it's better than wearing the dress shoes. So So the reason I did this is because if Pabrai funds did not pay me, just like with Jason not getting paid, I would want some place to go to work, and I would probably dress like this. So I don't want to do something which I'm doing because I'm getting paid, because that's the wrong decision. And also I learned many things from Warren and Charlie, especially from Warren. One of the things I learned is to run an empty calendar, okay? Nothing on the schedule. Like Warren will show you his calendar for days and weeks. He has nothing on the schedule. He just comes to work, he reads. If he wants to call someone, he'll call someone, but there's nothing that at 10 a.m. he has to do something and 10:30 something else. He doesn't work like that. Neither does Charlie work like that. And when I saw that that's how these guys work, I said, that's really good, and I'll copy that. Okay, so I copied the fact that, like today I had peaking you on the schedule. Okay, I think it's the only thing on my schedule this week. Okay, usually they might maximum like one thing or something. Sometimes there's nothing on the schedule. And so how does Buffett operate, such a large company with so many CEOs, so many things, with nothing on the calendar? Because what will happen with him is some senator will call him. Mr. Buffett, can we meet tomorrow for lunch, for example, right? Or like Jeff Bezos will call him. Can we meet, okay? And what Buffett said is, you have to be really good at saying no. Really good at saying no. So if I wanted to fill my calendar, it's very easy to fill. Every day people make all kinds of requests, okay? So I have about 400 investors, okay, all over the world. I can't even remember the last time I ever had a phone call with any of them, or ever had an email with any of them, or when I last met them, okay? So I learned from Warren Buffett when he ran the Buffett partnerships. He told his investors, I'm open for one day of the year when we have our meeting. And you can come to the meeting, and on that day, we can talk about whatever you want to talk about. And the other 364 days, I'm working, I'm not available to you. So if you want to ask me something, come on that one day. And I'll give you an annual letter which will explain what's going on. So Buffett said his communication to his investors was, actually he did two letters, a 6-month and 1-year letter to investors, and once a year an annual meeting. Now, when he did it like that, what happened is that his time got freed up, right? Because he doesn't have to, like, let's say my fund goes down 20%. I don't want to sit there all day answering questions why it's down. Okay, so actually what happens is, when the fund is down, nobody calls because they're very well trained. I spent a lot of time training them because they know even if they call, they get no data. So there's no point calling. Okay, so basically what happens is that, and I did all of that because I wanted to have a lifestyle which was set up so that I would do this if I was not getting paid. If I have to go to work and I have 30 calls to answer or a lot of emails to look at or whatever else, it just becomes a drag. So we don't. So I could not come up with these ideas on my own. I came up with this idea from Warren and Charlie, and I copied it. So one of the most important models that you can adopt is the model of cloning. When you see someone doing something smart, just incorporate it. That's a good way to go. There's a friend of mine, Guy Spear. He came to Peking U with me, I think 2-3 years ago. And Guy and I are good friends, and in fact he was just in Irvine last week, And we were in Vancouver before that for the TED conference, the week before that. So we are very good friends. And he's an investor. He manages about 200 odd million. And many times we talk about different stocks and ideas to, just get different perspectives. So Guy loves to own these great businesses that have very strong moats, and they are blue chip, really good businesses, okay? The problem is that when you own these really great businesses, everybody knows they are great, okay? So the price is very high. Usually the price is very high. And I tell him, it's not about the great business, it's about the great investment. So a company can be really good. It doesn't mean it will be a good investment. And a company can be not so good, and it could be a great investment. So the interesting thing about the investing game is, if the game was simply about finding the best assets or the highest quality businesses, it would be a very simple game. Because we can obviously figure out what business is great and what business is not so great. That's not so hard to figure out. So I found this okay business in India, which I thought was going to become a better business. People haven't heard about it. It's kind of unknown. And I told Guy, this business, this quirky, unknown business, is going to be a great investment. Great investment. And I told him, so he owned MasterCard in his portfolio. MasterCard is a very good business. Very high quality, almost a oligopoly, 2-3 players own the market. They don't need any capital to run the business. I mean, like 40% of revenue is profit. It's a great business. I said, this MasterCard is like at 30 times earnings. You made a lot of money. He already made like 12 times what he put in. He bought it a long time back. He put 1 million, it became 12 million. So I said, you made a lot of money. It's not going to go from 12 million to 144 million. If in the last 12 years it went from 1 million to 12 million, let me just tell you, next 12 years it's not going from 12 to 144. So I said, Guy, listen. I shook him up. It's time to sell MasterCard and buy Suntech Realty in Mumbai, okay? This unknown company. And of course, Guy, in polite terms, told me, get lost. So, what I do when people do that is I like to play mathematical games. It's just fun to play mathematical games. This is a picture of a small poster in my office, and I have many of these. At any given time, I have maybe 10 of these. Because I run into these humans who don't understand the concept of great investment and great company. So I told Guy, okay, here's what we're going to do. It is October 14th, 2018. This is when I had this conversation with him. In your corner is the phenomenal MasterCard with the impregnable moat, oligopoly business, great CEO, everything is fantastic. And that's called the Guy Spear pick. At that time, MasterCard was $204 a share. In my corner, this small, stupid company in Mumbai, Suntech Realty. No one even heard of it, right? And MasterCard, the market cap was 212 billion. Okay, 212 billion. It's a blue chip company. Suntech is less than 700 million. It is absolutely, I agree with Guy. The guy running Suntech is not as good as the guy running MasterCard. The moat of MasterCard is a lot better than the moat of Suntech. But that's not what this contest is about. This contest is about, I gave him 12 years. So I said, we're not going to have a 1-year contest because anything can happen 1 year. Because basically one of the things that Munger and Buffett say, that if you have a business with great economics, over the long term, your results will match the returns that the business generates over the long term. So MasterCard generates great returns. And I said, Guy, you've got such a great company. I got this useless company. We're going to go for 12 years. And every year, now when it is October 13th, 2019, it'll be a pleasure to go to work in shorts and send Guy an email. Dear Guy, it has been 1 year. Here's where we stand so far. 1 round is over. Another 11 rounds to go. So let's look a little further in these two businesses. Look at that. This is MasterCard. If you bought MasterCard at the IPO, when it IPO'd in 2006, it was $4.23 in the IPO in 2006. And now, yesterday, it's $254. More than 50 times, maybe 55 times, in 13 years. Unbelievable. And Guy didn't even buy over here. I think he bought at maybe around $20 a share, maybe somewhere here. 2010, somewhere here he bought. And every time I meet Guy, I tell Guy, have we sold MasterCard? No, I cannot sell MasterCard. It's too precious. Precious, cannot sell it. How can I sell it? Look at this. Can you sell this? You can't sell this, okay? And then we have just some data, okay? So it's 261 billion market cap. The trailing PE is 42. I'm almost having like a cardiac, 42 times trailing PE. Trailing return on equity is 106. We give you all the slides. You don't need to take pictures, don't worry. I send you all the slides. Trailing return on equity, 106%. And annualized return since the IPO, 37%. Unbelievable, great. But that's in the past. It's not going to help Guy in the future. We care about the future. We don't care about the past, right? So now here's Suntech. Look at the stupid chart, okay? MasterCard, so beautiful. Suntech, so useless, okay? Now, let me tell you why I don't want to make this session about stock tips. So don't think this is a stock tip. It's just to explain some concepts, okay? So in India, about 3 years ago, there was something that known as demonetization that took place. Some of you may be familiar with it. But what the government did is they made a bunch of currency notes illegal. And you had to put those in a bank and then get different notes because they wanted to wipe out cash transactions and black money and all these things. You know, there's an underground economy, they want to kill that. So real estate transactions in India in 2016 and earlier, they were always some portion paid by check and some portion under the table cash. It's a combination, right? When demonetization took place, it became impossible to pay cash because the cash is all illegal. So what happened is the real estate firms, most of them, they dealt in a lot of cash. And so people thought, oh, the real estate market is just clobbered. It's gone because You can't, now you don't have, people don't have the money. They can't come up with money from the banks. And so I noticed that in November or December of 2016, that these real estate companies that were publicly traded had collapsed in value because of this thing. But the people forgot something when they did that. So if we look at that circle, when Suntec was trading about 100 rupees a share, one could do a very simple exercise at that time. I could look at the real estate Suntec owned, because it was just listed, what they own. They had a bunch of finished apartments, they have in construction, they have land, all these things. Those have a valuation, either a market value or a cost value. And this was a company, there were few companies that never dealt in cash. They always did things the right way. And so before demonetization, it was a disadvantage to them. Because people would try to tell them, no, I cannot do this if you don't do cash. They said, we can't do any other way. We have to do everything properly. After demonetization, what happened is that 90% of the real estate companies disappeared. They can no longer function in that economy. So there were three things that took place in India in real estate. Demonetization, something known as RERA, Real Estate Regulatory Act, and GST, Goods and Services Tax. The combination of these three, the end result was that 90% of the developers were out of business. And very, very few developers were left standing. The ones that were left standing were the ones that always conducted their affairs with very high quality. They delivered the properties, they did everything by the rules, they followed everything. Suntec was one of them. And so at that time, when the stock was at about 100, the market value of the company was less than $200 million. Just one project that they had, where they had 60 finished apartments in the heart of Mumbai, those apartments were worth about 500 million. There's no debt. So the market cap is 200 million. They have 25 projects. One project is 500 million. Okay, there are another 24. So when I started to look at the value of everything they had, it was many times the value of the stock. There's no comparison. And reason why is that? Because people, when there is a seismic event like this, demonetization, they just run to the exit. Everyone just sell the stock and run, right? So the stock is sitting there, no one's interested. I am interested. I tell the broker, every share. Anyone who has any shares, just buy as much as you can, okay? And now we own 9.999%. That's the maximum I'm allowed to own. So the maximum that I could buy, I bought. 1/10 of the company we own. And you can see what happened after that is in the last 3 years, it went up almost 5 times. It went from 100 to almost 460, close to 500, right? And in fact, I'm not even doing the contest with Guy from 2016. I'm not using that 100 rupee price against MasterCard. I'm using a price when it's already gone up quite a bit. So if I go back, I'm not using 100, I'm using 355, right? So it's already gone up quite a bit. But I said, Guy, even with the 355, we'll kick MasterCard's ass, no problem, okay? And I'm hoping that in 5 or 7 years, he will understand what is already obvious to all of you. So there's Suntec. These are the numbers. The market cap is now close to $1 billion. Trailing PE looks high, 30 times. ROE is low. The returns since the IPO I don't care about. But the return since demonetization, which is when we invested for the first time, is 400%. The annualized return since then is about 95%. And here's where we stand today. So we started October 18th. Until today, MasterCard is up 25%, pretty good. From October to May, 25%. Suntec is up 38%. Okay, so far, Mohnish is ahead. Well done, Mohnish, so far. But we have 11 and a half years left to go. 11 and a half years. Now, let me just tell you something else about MasterCard. Buffett invested in Coca-Cola. He bought Coca-Cola stock for the first time. And from 1988 till 2000, it went up like 12 or 14 times. It went up a lot. They put about 1.2 billion, it was worth like almost 15 billion. Very nice one. From 2000 onwards, so Coke was very cheap, by 2000 it was trading at 40 times earnings. From 2000 to 2018, Coke delivered a return of less than 3% a year. Okay? Why did it deliver a return of 3% a year? It's still a great company. The Chinese love Coke. Do you love Coke? There you go. Okay, so Coke has a global footprint. It does well everywhere. The bottling business is separate. It makes a lot of money. The return on equity is great. Just like MasterCard, it's a great business. But the thing is, the starting price that you pay matters. In 2000, you were paying more than 40 times earnings for that business. And by 2018, it's trading at 17 times earnings. So the multiple went from 40 to 17. Okay, so MasterCard actually, in my opinion, is not as good a business as Coke. Why is it not as good a business? Because it is subject to disruption. You know, in China, no MasterCard. Do you guys use MasterCard in China? No. Wiped out, not allowed to come in. Okay, and the payment systems in China are way more advanced compared to MasterCard, and they're much cheaper, the frictional cost is much low. MasterCard gets 2% on every transaction, 2%. In 2030, I don't know whether they will get 2%. You know what I'm saying? So now if I go to my favorite stock, Moutai, do we love Moutai? Yes, absolutely. What a company. The ultimate moat, I can't think of another company which has a better moat than Moutai. Okay? Can Moutai be disrupted? How can Moutai's business collapse? What would cause the business of Moutai to collapse? So we know, if I compare MasterCard to Moutai, MasterCard can collapse. Moutai is very, very hard to collapse because of a 1,000-year history, and it's embedded in people's heads, and they have so much inventory, and you know, the thing is, it's got all the brand cachet, China is rising, all of those things, there are a lot of tailwinds that keep coming, they can keep raising the price. You know, just keep raising the price. So the thing is that Moutai, phenomenal mode. So MasterCard, one of the issues is that payment systems, it may be possible that in 2030, MasterCard is still doing fine. Possible. It's also possible MasterCard in 2030 is not doing fine. Right? We don't know. So anyway, my way of dealing with this is play a game. Okay? Let's play a game. And I could never get Guy to buy even one share of Suntec, even after the contest started, everything. But maybe in 5 or 7 years, we'll go to Q&A in a second. We'll do that in the end, okay? So we'll do that later. But let me continue so we can finish this off. Now we have this company. So I told you I have many of these contests running with many different people, okay? Another person, and you can see it's blacked out here. I didn't want to put his name. You know, protection of privacy. Guy, we don't care about Guy's privacy. Okay, other people's privacy, we care a little bit more. Okay, so a money manager told me recently, this is just April 7th. This game just started 23 days ago. Mohnish, Motherson Sumi is an unbelievable business. I said, Mr. X, forget Motherson Sumi. The action is in Rain Industries. Now, in this case, both businesses are in India. Okay, and let me just explain something about Motherson Sumi. You will enjoy this. Look at that chart. I think I can MasterCard chart right on top of it. So Motherson Sumi, in 1994, when it went public, it was at 9 cents. 9 cents. Now it is at 146. 30% annualized return over 24 or 25 years. It's great. What does Motherson Sumi do? Okay, so first of all, the name, Mother Son. The guy who runs it, who I met, he's a great guy, I like him a lot. Chand started this business with his mother. Okay? Since he started the business with his mother, he said the name should be Mother Son. Okay? Mother Son. And Sumitomo in Japan is a partner of theirs. So Motherson Sumi. That's the name of the company. Okay? But Motherson Sumi is a very unusual company. So they make auto parts, automobile parts, okay? But the way they run the business is completely different from any auto parts company in the world. So he has acquired over the last 25 years, maybe 30 or 40 businesses around the world. China, Europe, India, everywhere. They've got dozens of plants all over the world. But Chand, who's the owner and CEO, says, we never call a company to tell them we want to buy them. We have never done that. And if some company calls us and say, please buy us, we also do not do that. So I don't approach any company, he says, to buy them. And any company that comes to me, I also don't buy. He says, my customer is BMW, Volkswagen, Fiat Chrysler, etc. So he says, BMW will call me and say, Chand, I have a rear view mirror maker parts guy who is losing a lot of money. And they are losing $2 million a month, and I think they're going to go out of business. And my 7 Series BMW line is going to come to a stop if that guy goes out of business. So they say to Chand, can you buy that business? So Chand says, I only have 5 or 6 customers, BMW, Daimler, Fiat, blah, blah, blah. GM and so on. So when BMW calls him, Chand says, BMW, don't worry, I'll take care of it. So in 2 days, he looks at the business and tells BMW, you are right, this business is losing $2 million a month. It's a worthless business, not worth anything. So Mr. BMW, here's what you're going to do. You're going to write me a check for $100 million to cover my losses for 4 years, $24 million a year, okay? And you're going to give me a contract that you're going to buy my product. So what is the acquisition cost? Minus $100 million. BMW writes him a check. Why does BMW write him a check? The 7 Series line is going to come to a stop. They can't stop the line. You cannot stop making BMWs. They'll lose billions of dollars. So Chand buys the mirror manufacturer. And he does not make many changes. He only makes 2 or 3 changes. First change, whoever's running that plant is fired. First change. Whoever's the owner of running the plant, they're gone. Second change, he looks within the organization, finds a person no more than 35 years old, and tells the person, you are now the new plant manager. From the same plant. He does not send his own people. He takes, so if they buy a plant in Austria, they'll look at the people in Austria, in that plant, and they'll pick a guy and say, and the person they may pick may be 4 levels below the CEO. They don't care. Straight, he becomes a top guy. The third thing that typically happens when Motherson Sumi buys a plant, in about 3 months, it stops losing money. You know, he got paid 100 million. He only lost 6 million. After that, in next 3 months, it's making a little bit of money, and after 1 year, very solidly profitable. Okay? And BMW, extremely happy. And how many companies can BMW call like that? Not many. So Chand understands that his job, who is his customer? His customer is BMW. What is his job? Take their pain away. And they will call him and say, Chand, this harness company, I have a problem. Chand says, you have no problem, I'm there. In 1 day, they do the deal. Other principles that Motherson Sumi uses, they have never relocated a plant to save on labor. So they don't take a plant in Germany and move it to China. Never done that. Because they want to be loyal to the people who are there. And they said, we'll make it work with those same people. We don't need to move the plant. The other thing that they do is, Motherson Sumi runs on SAP. Their software platform is SAP. They don't impose anything on the company they acquire. So if the mirror company is using some other software, they will build all the interfaces at Motherson so they can deal with them. But they don't ask that company to change. And over time, that company is going to realize I'm better off being with SAP as well. So they'll change. So, and then what Chand has done, because he's a very good manager, he has his plant managers, who are all these young guys, talking to each other. They meet every 6 months or something, sharing best practices, going back and forth, and on and on. So Motherson Sumi, I think in the last 2 or 3 years, I met about 200 public company CEOs in India, or 200. No one is as good as this guy. No one. Best out of the 200. But I took a bet. I took a bet against Chand. Okay? Just like I took a bet against MasterCard. And I told the guy, Chand will lose. Okay? So you know what the fund manager told me? Mohnish, can I share this picture with Chand? Okay? The CEO of Motherson Sumi. I said, please feel free. Okay? Because Chand is very competitive. Okay? The moment he sees a picture like this, his blood will boil. That he wants to take the other company out. I said, you share the picture, do whatever you want. Rain is going to blow him away. Okay? Stupid rain that no one's heard of. Okay? So here's Motherson Sumi. See, my job is so much fun. You go in the shorts, you start a contest, and then just watch the drama. So much fun. That's why I don't need to get paid. It's fun without getting paid. Okay, so here's Motherson Sumi. 6.6 billion market value, trailing PE is 27, high return on equity, and since the IPO, 30% a year. Okay? This is not even the thing. What Chand does, Chand tells you in 5 years what the revenue is going to be, what the profit's going to be, what everything's going to be. He already told the market. So he already told the market that in 2023, my revenue will be 70% more than today. So the market tells him, Chand, how are you going to get 70% auto parts? He said, don't worry, the phone call will come. Phone call will come, I'll keep doing the deals, right? So Chand already told the market what he's going to do. Then we have Rain Industries. You saw the Motherson Sumi chart. right? Just to remind you of the Motherson Sumi chart. This is the Motherson Sumi chart. Here's the Rain Industries chart. Nothing happening from 1991 till 2015. Flat. Okay, the opposite of Chand. But I don't care about all this. This is when I invested for the first time. So, I'm going to make sure I keep you guys on track. So, Rain Industries, somebody sent me, some person I don't know, sent me an email which had a write-up on Rain Industries. I never heard of this company before that. So someone sent me a PDF, about 20 pages, explaining Rain Industries. 3 hours after reading the PDF, I'm buying every share. Okay? Told the broker to every share, whoever wants to sell. I own, guess what? 9.999% of Rain Industries. Just like Suntech, 9.999%. They won't let me go over 10. So just one share below 10, I just sit there, okay? And why did I buy Rain Industries? So the thing about Rain Industries was that when I saw the report I got, the market value was $200 million. And it's in the aluminum supply chain business. Like they make, these coal tar pitch and different products which go into the manufacture of aluminum. And it's an oligopoly. There are only 2-3 players in the world who provide that. So it's very concentrated. When I read the report, I said it's a very high probability that in 1 year, maybe in next 3-4 years, they'll make $200 million. So I'm buying the whole company for $200 million. In 2015, I thought by 2018 or 2019, in single year, they'll make $200 million. Okay? Of course I want to buy the stock then, right? And that happened. So I bought at about 35 rupees a share, and for some time nothing happened. And then in 2018, it's at 450 rupees a share, from 35 to 450. Okay? And then it comes down all the way, right? So even if I look at where it's come down, still a 3x. It's still 3x in 3 years, but at the peak, it was 12x in 3 years. Okay? Why did it do that? It did that because people did not understand the business. Motherson Sumi is a business everyone loves. 30 analysts are following it. Okay? Chand talks to all of them. They love him. MasterCard, 30 analysts following the company. You're not going to get mispricing. Rain Industries, nobody follows it. So, and I realized that what I realized with Rain, so Rain is very important because it's like Suntech. There are moats. Mautai is a moat, Motherson Sumi is a moat, MasterCard's a moat, and there are hidden moats. Hidden moats are very important. Rain is a hidden moat. So this guy who runs Rain, he got the business from his father. They never had any capital. That's why from the beginning, they were a cement plant. They couldn't do anything. He borrowed $1.5 billion high-yield debt in the US market and bought 2 large businesses with nothing down. So what he did was he borrowed $1.5 billion, bought this business. If the business did not work, he did not put even $1 of his own money. The bank can just take the business. He doesn't lose anything. If it works, it's his. And both the businesses worked. And then he paid on the debt. Now suddenly the $1.5 billion buy was 10 times the size of the company at that time. So there's a company that has 200 million in revenue. It goes and buys a company that has 2 billion in revenue. That's what happened with Rain. They bought a company that was 10 times the size that they were at, and they borrowed the whole thing. And they borrowed it non-recourse, where if it doesn't work, it cannot affect them. Very, very brilliantly done. Then the other thing I noticed with Rain was that when they put up incremental capital, they want very high returns. Like they have a project going on right now where they are spending about 70 million, some capex is going on. It will increase earnings by 45 million. You spend 70 million, pre-tax, you're getting 45 million. Really good return on equity. So anyway, the bottom line is Rain is another company that is got these things going on. And, market cap now is about 500 million, 550 million. The PE, it's only 6 times earnings, unlike 30 times there. Return on equity, and then, since I invested, it's 36% annualized and 248% overall. So, and then if we look at kind of what has happened in that contest, this contest only started 3 weeks ago, so there's no data. But Motherson is down about 4%, and we are up about 15%. So the ship is going in the right direction. But if we meet again, I'll give you an update, what's going on. Okay, so the main thing I wanted to convey to you was that the interesting thing about investing business is it is not only about finding great businesses. Of course, it's good to find great businesses. And in fact, I believe Rain actually is a great business. It's just sort of not known like that. Maybe in 5 or 10 years, the guy who runs Rain will get a reputation like the Motherson guy. Maybe. If and when that happens, it'd be at 30 times earnings. It'll get to that point. And in the meantime, we own 1/10 of the business and we just sit on it, let it ride. And so those were the thoughts I wanted to share with you. So we can open up for questions. And if you just tell me whether you're a grad student, undergrad student, or if you're working in industry, that'd be great. So tell me your name and your question and we'll go from there.
It's very good talk, since you compare the great business and great investment, the difference. And you mentioned that Warren bought the Coca-Cola 1988, and then they have great return since 2000. Mm-hmm. And then, do you think it's a mistake? He hold from 2000 to 2000. You think maybe you do the contest with Warren in 2000?
So Warren actually talked about the Coke investment.
Yes, that's the why.
Yeah,
what do you think?
He actually talked about the Coke investment in 99, 2000, 2001, and at that time, right around 2000, he was very euphoric about Coke. If you go back and look at the Berkshire annual report, they put all the meetings online, buffett.cnbc.com. If you go to the 2000 meeting and you hear the discussion on Coke, at that time from 88 to 2000, just gone straight up, nothing else. Straight up, 45 times earnings, doing really well. And he was, I think, euphoric about Coke. And about 3 years later, now he said, for Berkshire, it's a difficult decision to go in and out of stocks, because they're so big, and the moment he starts selling, the price is going to drop and all that. He mentioned that in hindsight, it was probably a mistake not to sell, okay? But also you have to remember with Berkshire Hathaway, the math is different because they have so much cash. Like today, they can't sell Coke. If they sell Coke, it'll go to treasuries. Makes no sense. But clearly in 2001, 2002, it would have been a really good decision to move out of Coke. And at that time, Berkshire did not have as much cash, and they could have done something else with it. But Buffett also has a bias, which is a good bias. His bias is he wants to be a collector of great businesses, and he doesn't want to time it. So if you think about Berkshire's Coke investment, now it is 31 years old, 31 years since they bought it. I don't think even for the next 25 or 30 years they will sell it. Just keep it. And of course the returns, in my opinion, they may now get better because the multiple is lower. It may be better for next 10 years than last 10 years. But even the best investor, Warren Buffett, is going to make mistakes. And him not selling Coke in 2000 and 2001, probably a mistake. Just the way it is. But in the investing business, you can be wrong 40% of the time. You still do very well. So no problem. Next question.
Thank you for your great talk. So I have two questions. The first one is that, do you think a great company is the precondition for the great investment? The second question is that, how did you predict the future growth of rain industry? Because in the past, it didn't grow as much. So I think for value investing, we usually look at the company that have great performance before, and then use what is competitive advantage, so to predict whether it can grow as well in the future. But for this company, it didn't grow a lot in the past, so how can you predict it will grow a lot in the future?
Yeah, I think that's a very good question. Please have a seat. In this particular company, in the case of Rain, the company had taken some very bold steps. They took a very bold step in 2000, I think in 2008, when they bought one business in the United States. They borrowed about $1 billion, and they bought a business in the United States. And what they did was, at that time, they borrowed high-yield debt, which means they were paying about 11 or 12% interest. But non-recourse means if it didn't work, they had no liability. So they bought this business for $1 billion without putting any money from their side. The entire $1 billion came from the bond issue. So which means that if it works, they have upside. If it doesn't work, they have no downside. Okay? That $1 billion purchase was 5 times the size of their business in India, 5 times. So it's a very significant event. And because they have so much interest payment going on, earnings are not really coming through on that because it's paying on the interest. But you could see that they took that deal was a good deal. Then about 3 years later, he bought a second business in Europe. And again, same thing. He borrowed $700 million for the second one. But he did something smart. He put all the debt on the first business he bought. So if things didn't work, the second business, he would just own it. He would still own it. So for an Indian company in India to convince Merrill Lynch, Goldman Sachs, etc., to underwrite a bond issue of this type is not easy. You know, you just can't show up in New York and say, hey, give me $1 billion. But he was able to convince the bankers to give him the money, which means borrowing money is much harder than borrowing equity. It's a lot more stringent. So the first data point was that he was actually able to convince the bankers, and they were actually able to raise the capital and buy the companies. And what Buffett says is that, so there are 2 ways to look at the history of the business. You can look at the stock chart. That's one history. The other is look at the actual record, what is going on in the company. And what had happened was the 2 businesses were very good, but in 2015, the industry was going through a downturn, and so their earnings were very, very slim. And I could see that there's cyclicality in that business. It goes up and down. But we were at a low point in that cyclicality. It was hard to see that we would go below that. So I said, okay, even at the low point, they're still making money. They're still okay. If it changes a lot. So what happened in the next 3 years, from 2015 to 2018, is their earnings increased. And what they did was they took the 11% debt, refinanced it. Now the interest rate is 5.5%. So they took the debt interest rate, they cut it in half, and non-recourse. And what I noticed is that every time the company will do some project, some capital project, they always execute really well. It all comes in on time, they're doing well. So initially when I bought the business in 2015, I just thought this is a cheap business, I'll make 5 times my money and I'll sell and go. I thought, okay, buy in 2015, but 2018, 2019, make 5 times your money, sell it and go on. That was my thought. Then as I understood, so one thing to remember about investing, you will only learn the business after you own it. You will not know the business when you analyze it. When you become an owner, that's when you, so from 2015 onwards, I really started to understand the business. And the CEO of this business, he does not want to meet investors. He doesn't meet investors. He just wants to run a business. So after, I think in 2017, I approached the company for the first time to meet them. The CFO said, I'll meet you. The CEO, he's not interested. So I met the CFO. That gave me some information about the business. Then I told the CFO, I'm coming again to Hyderabad. Can you ask Jagan if he will meet me? So now they knew that I had held the stock for 3 years and I have not touched even 1 share. It's just sitting there. That position is sitting for 3 years. So the CEO agrees to meet me. Okay? And when he agrees to meet me, I could see he's really not interested to meet. He wants to just be in his plant, running his plant. But in that meeting, I think we have some connection. We make some connection. So then January of this year, I told them I'm coming again. He was excited to meet me. Okay, so now I said, okay, good. Now we can actually meet sometimes. And I was finally able to get into how his brain works. You know, like with Motherson Sumi, you have to understand the way Chand's brain works. Like Chand will wait for BMW to call. He's not going to react until BMW calls. So that's a very powerful part of the moat. And with Rain, I understood that Jagan is a very good capital allocator. He understands capital allocation really well. He's going to be very careful where he puts his bets. And he's architecting the business to become better and better. So I said, okay, this looks good. And I think for the market to understand all this, because he doesn't talk to them, it may take 5 years. It may take them a long time. It's fine, but we think of ourselves as owners of the business. You know, we own 1/10 of that business, and I think of myself as an owner. I want to own that business for 10 years, 15 years. I just want to own that business. Suntech, I want to own that for 10, 15 years. The other thing that's happening in Mumbai with Suntech Realty, which I forgot to say, is that the whole city of Mumbai, in the next maybe 30 or 40 years, will get torn down and rebuilt. Because the land is very valuable and all the buildings are very 2-3 story. So all of those will go away and become big towers like China. Right? And so that tear down and rebuild, there are only 8 or 9 players left in the whole city. So Mumbai is expected to become one of the most densely populated cities in the world in 50 years. It'll have about like 60 million people. And that whole housing of 60 million will get torn down and rebuilt by 10 companies. Okay, Suntech is one of those 10 companies. So you just have to sit. We just have to sit for a while and just watch the show. And when they tear down and rebuild, that business is really good because you keep selling the apartments before the tower is up. You know, people are putting deposits as the tower's coming up. So it's a really good business from that perspective. So anyway, so the bottom line is that these were what I would call special situations where the business was there, it was good, but there was kind of a cloud on it. So most people will not invest in businesses like that because they just can't see it. But I think our job as investors is to peel the onion. Peel the onion, and the most exciting ones are ones where you find a great moat, but no one else can see it. Yet, you invest before people can see it. Yeah, go ahead.
For me, it looks like the MasterCard and the Syntax all a good business, but the only difference is a good business and a great business. So if you have tenfold of money you have right now, and would you change the selection when you're choosing the stock? And that is means you have different risk bets, and that is also in term of you have the defining value investment is could be different. Would you change the philosophy if you have more money when you're choosing the stock as then? And first question. And second question is, looks like when you pick up the stocks, not after a long time, the stock show up a very good uptrend. So would you see any significant symptoms or anything happened when you pick up the stocks? Thank you.
I think I got your question. If I don't answer it, we can try and do that. We can try and do it again. But the thing is, one of the reasons I made this presentation is because I have, in the last 25 years as an investor, not paid as much attention to great businesses as I should. The best way to invest is to buy a great business that's going to grow for a long time. Hopefully, you can get it at a cheap price. If you can get it at a cheap price and you can hold for a long time, that's the best way to go. My initial framework was buy a business at 50, 60% discount. It may not be that good, but in 3 years, that discount is gone. It may be grown a little bit, so you can maybe double or triple your money, and you can sell it and move on. The problem with that approach is that you have to keep finding new ones. Sometimes you make a mistake, and a lot of tax. A lot of tax gets paid, okay? And so obviously, if you can find long runways of great businesses, but so the way I am wired is, I tell my friend Guy Spear that to me it appears that you have hung up your boots, like you're retired. You just want to own MasterCard and American Express and Berkshire Hathaway and not do anything. It's fine. You'll do pretty well. I think my take is I can do better than those. So I don't think I have the type of psychological makeup which will allow me to say, oh, it's enough money now, we go into preservation mode. Mohnish will probably never go into preservation mode. Mohnish wants to pound and hit it out of the park. That's what we want to try and do. But one of the things I'm trying to learn is, I said, can I find, I don't want to invest in MasterCard or Motherson Sumi. There are 30 analysts following it. What am I going to know that they don't know? Okay, all the story I told you about MasterCard and Motherson Sumi, everybody knows it. Mautai, everybody knows it. Now I own Mautai. Such a good stock. So awesome. But the thing is that these are fully priced, maybe overpriced. And so for me, the key is, can I find the hidden moat? And I think Rain Industries is an example of a company that 10 years from now, people will think of differently. Now, let's say in the next 10 years, something happens to the guy, Jagan, the guy running it. That will be a serious problem. That'll be a problem. That is, for MasterCard, that's not a problem. It doesn't matter what happens to the guy running MasterCard. MasterCard will keep doing well. But for Suntech and Rain, the person running it is quite critical today. So I have more risk in terms of what happens to, if something happens to the person. So I have to watch that. So if something happens to either of those two people, I have to get out, because then I don't know what's going on. All bets are off. Because the bet is that this guy is a phenomenal operator. Even Motherson Sumi, if something happened to that guy 10 years ago, it wouldn't get where it is because he's got all the clarity. And now, today it probably doesn't matter because it is embedded in the company that this is how we operate and such. So I think that's the, as I'm learning more about investing, because this is a lifelong journey, you definitely want to try to own good businesses, great businesses, but you want to do the work to invest in them when no one understands it. That's really the key.
I know you're a big fan of Warren Buffett, but it sounds like your philosophy is quite different, or your practice is quite different than Warren Buffett. So I have 3 questions. The first one is about rain industry. It's very interesting. You mentioned the hidden moat of the company, but from my perspective, I heard the LBO. Definitely, it's a very phenomenal leverage buyout case here in rain. But do you think it is the moat for the company? Because it is quite like one time or 2 times, but it's not a recurring operating thing for the company. Because in traditional classical value investing, you have to think about the recurring operating things like revenue or earnings. But for the M&As, it could be good at this time, but it's not a like recurring.
Right. So let me, I'll get to your other 2 questions in a second.
One by one.
But let me please have a seat. But let me just go through RAIN in a little bit more detail so you understand it. So a company has 200 million in revenue. They do what I call a public LBO and buy 2 billion of revenue with a lot of debt, right? 1.5 billion in debt, they bought 2 billion in revenue, okay? What I liked about that, normally I don't want that, is that I spent a lot of time studying, can the debt hurt them? And the way it was structured, the debt, in the worst case scenario, they just lose what they bought. They didn't put any money in it, they get back to where they are. So they cannot go below where they are, they can go above. That's the first thing. With any LBO, you're right that you get a pop from the leverage. But RAIN, that's what I thought. When I bought RAIN, I said, okay, there's leverage is there. Once there's debt, they can refi it, they can do a few things, they can get more equity, you can get 4 or 5 times your money. That was my original thought. But what I realized after owning it for 2 or 3 years was that the guy running it, because I went back and talked to him, so he's about 53 years old, and I had a conversation with him about his journey from his early 20s. So he went to Purdue University here in the US, and most of his career, he was very capital constrained. He didn't have the money. You know, he's trying to do things, he didn't have the money, which is why he borrowed all this to get this. The assets they bought, those are oligopoly assets. There are only 2 or 3 players in the world who can provide those products. So they are very critical. If Alcoa wants to start an aluminum plant in the US, they will not start the plant till they talk to RAIN. RAIN has to tell them, I can provide you the product. Only after that, they will start the smelter. So the products are unusual in the sense they are not commodity products. They actually have a lot of long-term contracts and stuff. The second thing I found out was that I saw him now allocate capital in an interesting way. So RAIN allocated 140 million to 2 projects, capital projects. That will generate 100 million a year pre-tax. If I spend $14 on capex, and after tax, I'm going to get $7 a year. I spend 14 and every year I get 7. That is extremely good capital allocation. So a company which only has a market cap of 200 million when I buy it, is now able to add close to 80 or 100 million pre-tax on the reinvested capital. And so if you run that engine for a few years, so let's say Rain in 2019 produces 100 million of extra cash, and they reinvest it. They'll probably make 50, 60 million on that. Then 2020, they make 150 million reinvested, they probably make 100 million on that. So if your reinvestment rates are like that, I want to run this thing for 10 years. You know, I want to see. So in my opinion, there's a chance that we will get to a company that maybe makes 400 or 500 million a year, where in 2015 the market cap was 200 million. Okay, and so even if that doesn't happen, because my buy price was so low, and they have refied everything and all that, it's hard to lose. But let's go to your next question.
Yeah. Thank you. Fair enough.
Yeah.
The second question is, I think the two cases you have mentioned, Suntech, it is quite similar to event-driven things, like because of the demonetization in India that help Suntech that boost their business, and also about mother-son Sumi you have mentioned, because the suppliers or its clients needs to give them the call, right? It doesn't seem like it's very convincing that it always have the cost, because like for example, for the mother Sumi, in the automobile industry, it's not a common phenomenon that BMW
just to give you some information, Mother Sumi, auto parts manufacturing is a terrible business. One of the worst businesses you can be in is auto parts. You know why? Yeah. Because BMW beats you up.
Very strong, yes.
Beats you up over and over and over on your head to drop your margin, drop your price, drop everything. And the other side, the union beats you up. Okay, so you get squeezed on both sides. Union on one side and BMW on the other side, both squeezing you, okay? And the number of auto parts companies that go bankrupt every year is a very long list. So one thing to remember about business is businesses going to the graveyard, continuously happening. Mother Sumi is very powerful because it is a law of physics that X auto parts companies will fail every year. Guaranteed. Okay? And some of those that fail will cause, so what BMW tries to do, they want second source. On everything they want second source. Exactly. Right? But what happens is that because these supply chains are so efficient, so what happens is, let's say I have mirror manufacturer, and I have two mirror manufacturers. The problem is the second guy doesn't have the capacity. It's going to take him 18 months to come up with the capacity so he can, you know what I'm saying, you still have a problem with your line. Yeah. So you did second source, you still have a problem. So what I'm trying to say is that Mother Sumi for 25 years has non-stop been buying these businesses by phone calls from the auto companies. In the next 5 years, he will get more phone calls. That is guaranteed to happen because it's such a lousy business, and the people running these auto parts operations, they get old, it gets more difficult, the guy's made a lot of money, he's not that's why he takes the old guy out, puts a 35-year-old who has nothing, you know, and gets it going again. So the thing is that the rebirth of these places is taking place. So I would just say this, that companies going to the graveyard, companies failing is guaranteed. That's a great business to be in. Motherson does really well because it rescues graveyard companies. The rescue of graveyard companies is an incredible business. Okay, so that's so I think what I'm saying is if you watch Motherson in the future, I think that they will continue their revenues, margins, profits will continue to grow. I have no doubt about that. Okay, I know that that's going to happen.
Right.
But go ahead with your next question.
Yeah, I just want to share a little bit.
Yeah.
In China, the practice is when you are as strong as like BMW, you have 4 or 5 at least suppliers.
Yeah.
In the row. So you don't like.
So Motherson,
have
so
to
Motherson
manufacture.
has a number of plants in China, given to them by BMW. Same thing. It's not that it happened only in Europe. It happened in China, it happened in Eastern Europe, it happened in Russia, in India, in Latin America. There are plants all over the world. So even in China, they got the call. Take the money, take the plant, please, take it.
Yeah.
Okay, they got the call even, no, because the reason is it's very specialized. Autos you just get, the thing is that the problem with auto manufacturing is everyone went to the Japanese model, which is very, very efficient supply chains. The tire comes 15 minutes before it goes in the car, right? That supply chain is super, super efficient. Anything off, and it all goes in a... So the thing is that once you start having some issues, and many times the BMW can tell, the issue is the guy running it is an idiot. And BMW doesn't want to buy that plant because they'll lose even more money. If BMW try to run it, they'll lose even more money, okay? So they need what Motherson gives them, quick close. Motherson says, I'll start tomorrow. You know what I'm saying? So the trust, the moat they have with BMW is the trust. BMW knows I can wire him the money, it's not going anywhere. He's going to start, and he's shown me how many times he's done this in the past. So according to me, the Motherson moat is just an incredible moat. And that guy, I met that guy, he's an unbelievable leader. His people, I can see, they take a bullet for him.
Okay.
Just an unusual guy.
Great CEO
Yeah.
for M&As.
Oh, he's a fantastic CEO. I give you an example. I was talking to him, and I own Fiat Chrysler. I own the stock Fiat Chrysler. So I was just telling him, by the way, I see you do business Fiat Chrysler. So Fiat Chrysler had an auto parts business called Magneti Marelli, okay? So Chan says to me, he says, Sergio Marchionne, I met him in Detroit, and they wanted Motherson to take over all the Magneti Marelli India plants. They wanted to have them take them over because they knew that if he runs it, it'll run better. But what they wanted was Fiat keeps 51% and he keeps 49%. So Fiat has control. So Chand told the CEO of Fiat Chrysler, let me tell you how this deal is going to get done. The way this deal is going to get done is all those plants, I will have 51%, and you will have 49%. So he's telling Fiat Chrysler, the big guy, you are going to be the minority partner. I'm going to be in control. So Fiat Chrysler said, we never do that. So he says, look, here's a list of 10 companies. You call them, they will all give you the majority to you. I'm the only guy who will not give it to you. So I'm here for another 5 minutes. You can either do it my way or I leave. Fiat did it his way. They give him 51%, which means they gave him full control. Okay? And the reason is, again, because the trust is there, right? And he's a good negotiator, and he got the control. Because he says, I don't want to deal with, I don't want to talk to Fiat bureaucracy for things I have to change. I'm going to move and do my changes myself. I don't need to talk to you guys. And so they agreed. So I think that the Motherson moat is an unusual moat. I don't own the stock, but it's very powerful. In fact, I don't know of any auto parts company in the world that I would say is a better business than Motherson Sumi. I don't know of any, because this is very unusual, because you basically are part of BMW. BMW know they got it on my back pocket. If there's a problem, call Chand. So next question.
All right, the last one.
Yeah.
On the way here, I watched your presentation last year about the 10 commendations.
10 commandments, yeah.
Yeah, 10 commandments. It's great, but I have a few questions. About this, one question. You don't like analyst teams to help you select all the companies? You want to do it by yourself, or how many teammates do you have in your company?
Well, I pretty much operate myself. So,
Yeah, by
we have Dhando Funds. We have Fahad and Jaya who work on Dhando Funds. That's a separate business. But no, so the thing is, Pabrai Funds, I got this straight from Warren and Charlie.
Yeah.
How many analysts does Charlie have?
don't.
Zero.
Yeah.
Warren, zero. Okay? Warren has got the whole Berkshire Hathaway, everything going on, still zero analysts. Okay? So actually, we don't need analysts. Why do we not need analysts? I only need to find 2 or 3 stocks in a year. I have enough time to find 3 stocks, no problem.
Okay.
To find 3 stocks, why you need 10 people?
Yeah, but actually you have to select from a lot of companies.
So you know what you do? You know how you select? You be a cloner. I watch what Li Lu does.
But your philosophy is a little bit different than others, right? You don't want the public known good companies or great companies.
Yeah, but the
right?
thing is,
You want-
you are going to send me an idea.
Like who?
You are going to send me your best idea. Dear Mohnish, this is really good.
Yeah, that is a very ability for you.
But my email address, just so you all have it, mp@pabraifunds.com. Don't send me jokes, okay? Please send me your best ideas.
Okay.
Okay? I need ideas. I have no team.
Yeah.
I depend on you.
Yeah, it's just my question.
Yeah.
So where is your source? Like,
My source
how-
is
how did you
open
get-
source.
Okay.
So the best.
You depend on
The best part is now, I just started buying a stock yesterday. Some guy in Canada sent that. God bless him. Rain Industries was sent by a guy in Vancouver. Okay, I didn't know him. So I went to Vancouver. I said, listen, we make so many $1 million. I need to buy you lunch. At least let me pay you for your lunch. And so I make sure I buy him good lunch. Dim sum lunch in Vancouver. So I think almost last few ideas, they have all come from other people. They're not well known. You have to dig through and all that, but then, we like those. We like those that when they are not known and all that. So there are 50,000 stocks in the world. There are at least 3,000 of them that are severely underpriced, if not more. I probably cannot understand most of those 3,000. I just need to understand 3 or 4 of them. That's it. So it's not very difficult.
Great.
So it's actually good not to have a team. You're not forced to do anything. If you send me idea, I don't like it, I just move it away. It's okay, no problem.
It's an advantage.
Yeah, exactly. Thank you.
Thank you very much.
Okay, yeah, go ahead.
It seems that you really love small but good business, and especially when it is trading at a cheap price. And I found that China has many small companies listed in Hong Kong stock market, its shares, and many of them have management issues or management problems. So my question is, how do you make sure that your company their management act to maximize the shareholders' value?
Yeah, so actually it's not true that I'm always buying small companies. Recently we took a stake in Micron. They make memories. The market cap of Micron is more than 40 billion. Okay, so we're not always buying small companies. I mean, Fiat Chrysler now, I think the market cap is over 20 billion, for example. One of the things about capitalism is that many small companies will never become big companies. They will always stay small, okay? A very small number of companies actually have something unusual that will allow them to grow, because capitalism is very brutal, okay? So, like you said in Hong Kong, these companies have issues. The moment they have issues, we are moving on. So if the issue is with the people, I'm definitely not interested. So if you notice the Suntech and Rain Industries, the people are very high quality. Okay, I don't have governance issues or anything with the people. They are very high quality people. The businesses are, it is possible now, like I'll give you the example of Suntech. The guy who is the promoter of Suntech, he owns 68% of the company. So if it has a $1 billion value, his family has 680 million in wealth in the company. So one of the questions I have is, he's in India, 680 million is a lot of money in India, right? It would be like 680 million in China. So one of my questions is this guy going to still keep working hard, right? Because it's a lot of money, right? And I have to make the assessment. And my assessment with him was, yeah, because I talked to him. I said, listen, your company is $1 billion. Do you have aspirations for it to be 10 billion? He said, yes. I said, what are you going to do with the money? He said, I had not thought about that. But he wants to drive, right? He wants to drive. Now, it doesn't mean he'll get there, but at least he needs to have some ambition to go there. The same thing with Rain. I am convinced that he has zero interest in money. I think Rain, the family owns 40% of about 500 million. So their family has about 200 odd million today, but they don't care about that. They just want to keep going. So so I think it is true that a lot of small companies will never become big companies. It is true that if you have governance issues with the people, I think you should just take a pass, because I think that then you're playing uphill battle and such. But as long as you can find the business economics are good and the people are good and the value is low, then we can make something happen. And the good thing with investing is there are so many stocks that one of my commandments was to be unreasonable. Okay? There's so many other stocks that if everything is not perfect, just say no, toss it. Go to the next one. Again, say no, toss it. So keep tossing. Be a harsh grader. And that'll generally work out well. I think maybe one more question.
I think the Indian stock market is quite different from the US stock market, right? So I guess my question is, how do you see the key difference of doing value investing, like between the Indian stock market and US stock market?
Yeah, that's a great question. So one of the big differences is that when I invest in the US, I probably never ever meet the never ever meet the people. Like, we bought Micron Technology, I've never met the people. I've never met the company. In India, we will not invest unless we've really kicked the tires, because one of the problems we have in India is we have a lot of fraud. Okay, so in the US, I will lose money because I'm stupid, but I'm not going to lose money because of fraud. Okay, so I have actually met with companies in India which are total frauds. I'm in the room meeting them, and it's obvious the whole thing's a fraud, once you start looking at what's going on. So far in India, we have never lost money because of fraud, and that's one of the things I want to protect against. The second thing is that in India, most of the companies, they are majority promoter owned. Okay, and so then one of the issues is that many of them don't think it's a public company. They think it's their own company. And the fact that they're public, they ignore it. Sometimes that's a negative because they don't care about the outside shareholders and such. So I definitely want to make sure that the business that we're investing in, the accounting is clean, the auditor is correct, the money is actually there, the guy is honest, and the person is governance best practices for the outside shareholder. So all those things become relevant. But the advantage that India has versus the US is a lot of companies are underfollowed or they are not well understood. And so I can find more gap between price and value. In the US, what has happened is that we used to have 8,000 public companies about 25 years ago. Now that number is 3,600. So it went down from 8,000 to 3,600, and the number of analysts and funds following those companies has skyrocketed. So it's much harder to find value gaps in the US versus India. So you have to adjust. So you have to adjust the tool set. And I think probably similar adjustments in India, in China as well, because you've got to make sure that the baseline is set where you're not looking at a fraudulent company, it's a real business, and the people are high quality and so on. So thank you very much for all your time, and I hope you have a great time in Omaha. I know you will enjoy that a lot. It's wonderful, and I think Peking University is giving you a tremendous education, and Himalaya Capital, we'll give them a round of applause. Thank you for helping sponsor your trip and so on. So thank you. Okay.